Hey guys, how you doing? I'm Kent Tilley, and I don't know if you've noticed, but the world is pretty calm right now, and that's making everybody not anxious whatsoever, including us over here. So I want to talk about my opinion about investing right now, and sort of how you should look at a few things. This is just my opinion, but I want to give it to you because I want to try and help everybody get through whatever the hell this is, because the way that I see it is that these are very, very difficult times, and every time in history you get through difficult times on the other side and things are better. And that's the end of it. It's always darkest before the dawn, and I don't know that, we're through the anxiety-ridden years that we might go through. So let's talk about how to invest when things are like they are today. The main thing you really need to think about is like, what are you investing for? And so when I think about investing, it's like we're investing so that we can achieve a goal, whatever that goal is. Is that goal a short-term goal? Is that goal a long-term goal of retirement down the road? Is the goal of keeping your money safe through retirement because you've already entered into that? And depending on where you are and your financial situation is going to dictate how you invest. Because if you're young, it doesn't really matter what you want to do if you can, and you don't need the money to survive, and you can invest and put little chunks away. You don't need to worry about what's going on. Everybody before us that is now, 60, 70 years old has been through stuff like this before, not quite like this, but have been through, world-changing events and market cycles and all these things. And as long as you stick to your game plan, are well invested and diversified, then you're going to be fine. If you're closer to retirement, well, now it's becoming scary because you're like, I need this money to last. Right, you do. But you also, do you need that money to actually make money and keep up and be making more than inflation over time? Or are you okay just pulling it out of your mattress and having it there because you just don't want to take any risks? And that's where that comes into play. So right now, for the first time in my career, there is an opportunity to actually make decent sort of guaranteed money, at least for the short term, with some cash. So the good thing about that is, that's where you might want to employ a bucket strategy with your retirement plan and say, I'm going to take 3, 4, 5 years of my first years of retirement money, whether that's coming from an RSP or a TFSA or a non-registered account, and I'm going to put it into this safe bucket, and I'm going to peel out of that so I don't have to sell investments if there's a big drop in the market, while also not taking everything out of the market and then trying to time it, because trying to time the market just generally doesn't work. The only time I would ever even really think about it is if you're like, that's, looks like it's super overvalued, or you see a giant drop and you're like, well, now it's on sale. I've got some cash. I'm going to buy in. The main thing that's happening and the main mistake that you can make while you're investing right now is gambling. And what I mean by that is trying to choose like a sector or a country or, crypto or gold or silver or real estate and putting all of your money into one thing. Because as soon as you do that, you've gambled on that sector or that one thing being the winner. I don't think you should ever try and bet on the winner. I think you should try and pretend like it's a roulette wheel that has more red on it than black and say, I'm always going to bet on red. Sometimes I'm going to go on losing streaks where black keeps coming in, but if I'm always betting on red, then at the end of the day, that is going to go up. So you've got some money in Canada, some money in the States, some money in Europe, some money in emerging markets, some money in fixed income, some money in real estate, some money in, gold and silver, maybe a little bit of money in crypto, whatever. Now you've diversified so that if shit hits the fan, some things aren't going to get as hammered as others. But we don't know what's going to happen. That's why you diversify with a good portfolio. That way, you're never going to win doing this. You won't. But one thing that will not happen if you do this is you will not be the loser. And so if your financial plan is stable enough and you're not the loser, then if everything happens like this, you're still relative to where you were before, because everything has happened to everybody else. So if the market drops 20%, everybody has dropped that much. You're still in the exact same position compared to your peers as you were before. And some people are going to lose. And there's going to be maybe a couple of people that were like, I've made money. And you're like, man, that guy's a genius. No, that guy risked his future and got lucky. He gambled with his future and got lucky, which you should never do. And so one of the main things that happened, and a mistake kind of that I made, and we'll look back on it later and see if it was a mistake or not, was I am worried about the stock market. I've never not said that. I've been saying that since February of 2021. I'm worried about the market. I'm worried about a lot of things in the economy. And one of the things I said was, well, let's say you're generally a risk level 7. Maybe what you could do is go down to a risk level like 5 or 6, where you own more bonds than you normally would and have a little bit less money in the equity market, because if things go bad, the bond market generally does all right. If the stock market drops, that'll keep half of your money sort of stable while the other part drops, and then rebalancing back into the stock market. Not totally changing everything, but taking a little bit of risk off the table. But what I should have foreseen coming, but I didn't, was because all of the governments printed so much money, that there was massive inflation. And when massive inflation happens, the first thing that they need to do is increase interest rates to try and tame inflation. As soon as they increase interest rates, the value of the bonds that you own go down. So for the first time in 40 years, over the last 2 years, bonds went down at the same time as stocks, and kind of even worse. So what was supposed to be safe actually didn't work out very well. However, now you own all of these bonds in your portfolio, and you're like, this safe part is getting its ass kicked. It sucks. I want to go into the riskier part. However, what could potentially happen is, let's say the stock market crashes. Well, they have 2 options left if that happens. They say, okay, we're going to print more money, stimulate the economy more, and create more inflation, or we're going to reduce interest rates so that people start borrowing again to try and stimulate the economy because they're borrowing again. If they lower the interest rates, all of the value of the bonds in your portfolio are actually going to go up. So when you're looking at 2 things that are good assets, stocks are good long-term assets, and so are bonds. In what proportion, who knows? And the bonds have been going down and been crap for decades, and the stocks have been going straight up for decades. Okay? Well, if you're looking at what to buy, most people are going to be like, I want to buy the one that's going up. And it's like, no, we actually should have bought the one that was going up here. Maybe we actually want to own some of those because they're down and they're lower than normal. And this one is averaging higher than normal. So I'm not saying to go all into bonds or all into stocks. I'm just saying we don't know what's going to happen. That's why you need to kind of own everything, because anything can happen. So, if you've got short-term needs, don't risk your money. Is a big, easy one. Never gamble by putting everything into something. There's a lot of people talking about leveraging and sure things and guaranteed returns. Like guaranteed returns do not exist except with GICs, basically. But they're not liquid, so you don't have too much of an opportunity to do things. If a GIC is going to make you feel okay, and you're okay just kind of keeping up with inflation for the rest of your life, and your retirement plan won't fail if you're going to do that, then choose that option if that's going to make you most comfortable. I don't want to sell anybody anything that's going to make them uncomfortable or, lose sleep at night. That's not what this world and investing is supposed to be about, right? You're supposed to be able to enjoy your retirement, and if that's all you need to do, then do it. But if you're young, you still need to invest to make money. Putting everything into real estate is dangerous. You're borrowing, you're risking, you're leveraging. So don't take these big risks right now because they could significantly backfire. The amount of people that you haven't heard about over the last 3 years that have lost their shirts and then some is out of this world. And so if everything goes down, those people are going to be done. And now you're in a better position than they are to capitalize on the future. I hate listening to people that are like, get rich when everything goes wrong. No. Good people that want to get rich when everything goes wrong are because they're creating value. They're creating something new. And so if that happens, and you own the entire stock market, and 50% of the companies that you own go out of business, that seems like a nightmare. But you still own all of the new companies that are going to come in and create value for you as a shareholder, and that's going to go up. That's why the stock market over time wins, because companies are here to create value for people and make money. Who knows which one is going to last forever? None of them. So own a lot of them. Stay patient. Don't panic. Make sure that your investment strategy matches your long-term goals. And if you need to, modify it every once in a while, but do not keep switching back and forth because that's always a losing proposition. So I don't know what else to say about that, but I know there's a lot of concern out there. It's stressful, but there is a way to at least keep yourself in the position that you're in or better. And that's all I would be shooting for in a time like today. Don't swing for the fences.